Trends and momentum. There's an old saying in trading: the trend is your friend. Most beginners lose money not because they cannot read charts, but because they fight the direction the market is already moving. Today, you learn to spot that direction. First, what is a trend? A trend is the general direction of price over time. Think of it like movement on a staircase. In an uptrend, price makes higher highs and higher lows. Each push upward reaches a new high, and each pullback still stays above the previous low. The market is climbing step by step. A downtrend is the opposite. Price makes lower highs and lower lows, like walking downstairs. Each bounce becomes weaker, and each drop moves lower than before. Then there's a sideways market, also called consolidation. This happens when price moves inside a range with no clear direction. It bounces up and down, but doesn't really go anywhere. Beginners often mistake this for a strong move starting, but sometimes the market is simply resting. Now let's talk about how to identify a trend. The first step is simple. Zoom out. Many beginners stare at tiny movements and get confused. Looking at a higher time frame, like the daily chart, helps you see the bigger picture more clearly. Next, mark the recent highs and lows. Are they rising, falling, or flat? That alone already tells you a lot. Rising highs and rising lows suggest an uptrend. Falling highs and falling lows suggest a downtrend. You can also draw a trend line. In an uptrend, connect the lows. In a downtrend, connect the highs. If price keeps bouncing near that line and continuing in the same direction, the trend is still healthy. Think of the line like a guide rail that price keeps respecting. Now let's look at momentum. Momentum is the strength behind a move. A strong trend usually has strong momentum. On a chart, that often looks like long candles and small pullbacks. In simple terms, price moves strongly in one direction and doesn't give much ground back. Weakening momentum looks different. Candles become smaller, pullbacks become deeper. The trend starts struggling to continue. This matters because trends usually do not end instantly. They often weaken first before they reverse. Quick question. Price makes a higher high, then a higher low, then another higher high. What kind of trend is this? Think about it. The answer is coming up. The answer is an uptrend. Higher highs plus higher lows is the classic definition. Why does this matter? Because trading in the direction of the trend puts probability on your side. The market already has momentum moving one way. Going with that direction is usually safer than fighting against it. Trying to catch the exact top or bottom sounds exciting, but it's one of the fastest ways beginners lose money. Strong trends can continue much longer than people expect. It's like swimming against a strong river current. Possible sometimes, but much harder. One more important idea: real trend versus fake out. Sometimes price briefly breaks a trend line, then quickly snaps back. That's called a fake out. One dramatic candle alone does not mean the trend has changed. Instead, look for confirmation. Does the market actually begin making lower highs and lower lows? That structure change is the real signal. Focus more on the overall pattern than on one sudden move. Quick recap. Uptrends make higher highs and higher lows. Downtrends make lower highs and lower lows. Momentum shows the strength behind the move, and trade with the trend rather than against it. And wait for structure change before believing a reversal. Follow us for weekly crypto education, made simple. This content is for educational purposes only and should not be considered financial or investment advice.